Welcome back to Investing and Trading Live. As always, my name is Josh Lilquist, and boy, I tell you what, these markets this week, especially with some of those stocks, Al, have really shown some great opportunity to the downside. And we discussed that a little bit in the last segment. I want to cover that a little bit on this next segment too, because I want to get into the common mistakes that people make. But before we do that, we had a lot of people texting in for this investing class that we do here locally. All these concepts and techniques that we talk about in the show, we cover in these investing classes. They're about 2 hours long during the week, also on the weekends, and really helping you make smart investing decisions, but getting started on the right foot. Just text investing to the number 210-210 right now for 2 seats for that. Text the word investing to the number 210-210 right now for 2 seats for that investing class here in Bloomington. Also, a jumbo pack. There's a couple topics in there. There's some stock picks in there. There's also some topics on how to get started right away and consistent strategies in the financial markets. Text investing to the number 210-210. Make sure to subscribe to the podcast if you do miss part of the show on Apple Podcasts, iHeartRadio, and Spotify. Just go to Investing and Trading Live. That being said, Al, those common mistakes that people make in the markets happen every single day. And here is a crazy little analogy, and a crazy thing that happens is anything that we do in our everyday life, whether it's you have someone that's in the construction industry, somebody that's an engineer, somebody that is a doctor, a nurse. You like to talk about radiologists a lot. And it's all professions that people do for a living or whatever that may be. And it's a skill that they build. And some of them go to school. Some of them maybe go to some sort of training to do that, to learn how to do their and hone their craft, right? Mm-hmm. Now, the financial markets is similar, but totally different. And here's why. It is so easy to get in the markets because all you have to do is open an account, fund it, and start hitting buy and sell. And the crazy thing is that's what everybody thinks, how they think they can be a master in the market just by opening an account. And they say, yeah, I trade and invest, but I just guess. I just buy and I hope it goes up, or I sell and I hope it goes down, whatever that may be. So it's so easy to get in the markets, and that's what people do without the skill. You know, it's great. We were working with a great group of people here this week, and seeing some nice people. We had a nice young lady coming in, and she was new to the markets, but wanting to get started off the right foot. So, you know, helping her getting down that path to get started is second to none, because you know that someone is serious when they want to learn the skill and master that instead of just going and putting money in the market. Now, you have some other common mistakes that people make when getting into the financial markets. Well, let's discuss some more of those, and then how do we overcome those mistakes to make smart investing decisions?
Well, there's a number of things that people are doing wrong. One is not knowing how to protect their assets. Mm-hmm. Number one thing we teach people is how to manage risk, and that's really the key. If you want to survive as a trader or investor, you have to manage your risk. Mm-hmm. Most people don't know how to do that. We talk about maybe having an insurance policy on your portfolio. People have no idea how to do that.
Well, the reason is because they just put money in the market and just buy. They hope, and there's no management.
They do, and that is
it's gambling.
That you're kind of, you know, you're conditioned to believe that the only way you're going to make money is put money in and leave it in the market and just let it ride there for years.
Yeah,
and that is true. If you hold money into something for 30 years, you're probably going to have a profit.
It's not always true. But we can't give our opinions. Sometimes our opinions could be wrong. That's not always true.
But even if you have a profit, if you just hold on to something and you don't take short-term profits that are yours, that should be yours, you may end up with maybe over 20 or 30 years. What if you have a 5% return or 2%
And some
return?
stocks don't make it even. Some stocks don't show a return.
Well, and some stocks are not even existing over that time period.
Yeah,
if you look at the makeup of the S&P 500, look at the makeup of it 20 years ago and look at it now. Things change on a regular basis.
Peloton was a phenomenal stock, and if you would have bought that at $100-some per share, there's going to be no gain there because it's down to $5 or $6 a share. So that doesn't always happen, but people think that.
Well, that's you're conditioned to believe that, but you're conditioned by people that need to have you believe it, so it makes their job easier, and that's really what's happening. They know that if they put you in this long-term buy and hold strategy, and then you go ahead and you agree to just let your portfolios go down in value when we're in a crash or a bear market, and hold on to it because you know at some point in time it's going to come back. And that's what their argument is, really, that yeah, we're going to have a lot of these downturns, but then we're going to have movements upwards in the market. They're going to wipe out those downturns. And that may be true, but what time period did it take? And why would you want to go from, let's say, $100,000 down to $50,000 and then wait years just to get back to $100,000 so you can say, see, that bull market took away all the losses, but you're right back to where you started if you're lucky.
But I just want to kind of elaborate a little bit more on that, because think about that for a second. Okay, if we're taught from a young age to buy stocks, hold them for the long haul, long term, whatever the term that everybody says the same thing, and then you're supposed to have a gain at the end. Okay, so ask somebody that has done that in their 50s and 60s, which would be 401ks, IRAs, and ask them, did you get wealthy by doing that? And if they say, well, no, I mean, nobody did. Well, then why the heck is everybody still being put in that strategy? That is why it's so imperative to have strategies for up markets, have strategies for down markets. But as you were talking about in the second segment, timing the market, when to be buying, but also when to be selling.
Yeah. And people are conditioned to look at the market as only beneficial if it goes up in value. That's one of the other mistakes people make. They don't know how to benefit in a down market. And we see that in all the classes that we have. People are surprised to learn that you can do just as well in a down market as you can in an up market.
Let's talk about some things that you've helped people. Once you get people over that barrier of that conditioning, that thought process, what are some of the things that you do to help people to make positive decisions?
Well, number one is showing them how the markets really function, how they work, how they move up, or why they move up, why they move down. And if you have the ability to determine with a high degree of accuracy when an upward move or a downward move is going to take place, that's kind of the key to being successful.
Yep. And to elaborate a little bit more, you mentioned why they go up and why they go down. So people are probably thinking right now, well, how am I supposed to know that? Remember, in the second segment, it's all about supply and demand.
Yeah. In the why, the one of the mistakes people make is they look at the why as being too complicated. They look at, well, what happened in the economy? What happened in this particular company? What were all the fundamentals? Why did the fundamentals get impacted a certain way? How is this company going to be impacted by a certain piece of news that's out there? Those are all things that confuse you and probably will have you making a decision that isn't in your best interest. Mm-hmm. The only thing that really matters is what is going to make price go up? When is that going to happen? What's going to make it go down, and when is that going to happen? It doesn't really matter why. It's just when it's going to happen.
It's just buyers and sellers, and that's why we make all our decisions on a price chart, because then the why doesn't matter. It's just because it's supply and demand. It's the economic law of supply and demand, just like gravity.
Exactly. And I think two of the mistakes people make is not knowing how to get out of a trade or investment if they're wrong, and not knowing how to get out of it when they're right.
That it goes back to when you were saying earlier about keeping your money, protecting it before you anything else. That's the number one. That's key.
Right, and that's one exit is if you're wrong, get out with a small loss. But the other exit is if you have a profit. If you make an investment and you have a profit, the unfortunate truth is that most people either hold on to it too long and see that profit dissipate, or they get out too early and they never achieve the full potential of that profit.
Yeah, it's funny. I was just talking to someone this week, and they're like, "Yeah, I got all these stocks, and they're all negative, and I'm just gonna wait until they come back."
Yeah,
I feel bad saying, like, I don't want to talk negative or anything, but it doesn't make any sense. It's common sense almost.
Yeah,
why would you let something continue to go down?
Yeah, and that is kind of the thinking. And again, I mention this all the time that as human beings we make decisions that are typically wrong for us, or oftentimes wrong for us, and that's one of them. We, especially as a male, as a man, we have this thing called an ego that will sometimes prevent us from taking a loss and getting out of something and going on to something that works. And that's typically the case. If something goes down, we'd rather see it come back up so we don't have to admit we made a mistake.
Exactly.
That's one of the things you have to control. You can't do that and succeed as a trader or investor.
You just really had me think about something. Stay tuned for the next segment. By the way, this segment is not done yet, but stay tuned for the next segment, because I want to talk about that belief system. Help people overcome that belief system so they can start making those right decisions. And there's a couple things that are within that that circle of that system. We're going to talk about that in the next segment. But all these techniques and concepts that we cover all these in a hands-on environment here at the Academy. If you're brand new to the markets and you want to get started in making the right decisions, it's going to take a little bit of action. And if you have goals or aspirations with your finances, you might need to do something different than something that you've been told all your life. And if everybody does the same thing over and over, and what's that word? Insanity, you're going to be in the same boat. Start now with the investing class by texting the word investing to the number 210 right now for 2 seats and the jumbo pack. So when you make sure to text in, you'll get a text right back. It'll say, welcome to Investing and Trading Live. It'll have a link to our landing page so you can pick your own date. So text the word investing to the number 210. Coming up, we're going to cover that belief system and how to overcome any challenges with your trading and investing. This is Josh and Al. We will be right back.